you all were kind of known as being the place for ED medications and things like that, but you've grown. Talk to me a little bit about what all you all are doing, because I think people know HIMSS as kind of like the nudge, nudge, wink, wink stock, but you guys do a lot more than just the ED stuff, although that is a big percentage of your revenue. We are welcoming in a very special guest today. I have none other than Andrew Dudum. He is the co-founder and CEO of Hims and Hers Health, a company that just recently went public, was valued at a paltry $1.6 billion, now approaching a $4 billion valuation thanks to a very strong stock market performance. Andrew, thanks so much for joining us on Voices of Wall Street.
Thank you for having me.
Hey, so let's jump right into news of the day, because you were impacted, or your company was impacted by this Robinhood decision to halt trading on some stocks. You guys were singled out along with, I think it was 49 or 50 other stocks that weren't allowed to be traded or had some trading restrictions. Talk to me about how that impacted you and what you think about the whole situation.
You know, the beautiful thing about Hims and Hers is we have a long time horizon here in the next 5 and 10 years of really revolutionizing the healthcare industry. And so short-term blips like what happened last week, really don't bother us all that much. I think it's an unfortunate situation, obviously, where Robinhood had to take some steps that, for better or worse, really affected a large part of their community. Given the tenure of our company, we're just a month into kind of our public debut. Right. And I think a lot of the momentum and excitement behind the company also created some, dynamics where we were unfortunately put on that list. But nonetheless, we were removed last week, and it's back to the races, I think, for the company without any issues.
Okay, but I have to imagine that impacted your liftoff, because as you said, you're a newly public company. The company was founded, I think it's 2017, correct?
That's right.
Yeah, and you went public via a SPAC, the Special Purpose Acquisition Company, which has been very popular. I want to talk to you a little bit about that. But I just have to imagine that really crimps your momentum as you're getting out of the gate. People are excited about the company. You've doubled the market value. And then all of a sudden, you're hit with these restrictions.
It definitely doesn't help your stock performance when you're not allowed to buy shares on Robinhood, right?
Yeah.
That's not going to help in any material way. But again, we were really only on that list, I think, mostly by accident, just because the stock was performing so well and maybe got flagged by their algorithms. So we were off, the no trade list for about a day or two. So it really didn't have a massive impact in us as a business. As you mentioned, the stock is up 100%, pretty much since we went public. And so we've had a lot of momentum. We've got a lot of long institutional funds starting to get into the company. And I think overwhelmingly, people really do believe that, the next 5-10 years is this huge innovation coming to healthcare. And for that reason, people are investing in our company for, I think, a really long time horizon, because, as a result of things like the virus, we all see that what we use in healthcare every single day really does need a ton of innovation, and we're really just getting started there.
Yeah, and you said it yourself. I mean, you guys are obviously have just boomed in terms of investment and in terms of visibility. I remember first hearing about Hims a few years ago. I think it was a Subway ad. I was on the New York City subway and saw one of those ads and was like, oh, okay. You all were kind of known as being the place for ED medications and things like that, but you've grown. Talk to me a little bit about what all you all are doing, because I think people know HIMSS as kind of like the nudge, nudge, wink, wink stock, but you guys do a lot more than just the ED stuff, although that is a big percentage of your revenue right now.
Yeah, we really focus on just taking care of the average person. So we have both the Hims brand and a Hers brand. And it covers, most of the things that each of us wake up every single morning and look in the mirror and worry about. And when you dig down and try to figure out, what are the things, you and I think about, Dion, and what every other person in this country thinks about, it's things like hair loss, and it's things like acne, and it's things like sleep issues, and it's things like sexual performance with your partner. And it's things like, why am I 45 and my energy is low? I feel like I should still be young and feel confident here. So we really go through, all of the major medical categories and conditions that the vast majority of the country feels and thinks about and worries about, and then just checks them off the list one by one, making it easy for people to come get access to doctors and treatments for as low as 20 to 30 bucks. And so, we always will have this kind of, fun, irreverent spunk to us as a brand, because I think that's just in our DNA of who we are.
It's an interesting choice of words.
So, that's right. I think if we're going to do healthcare in an innovative way, we're going to do it in our way, which, it has a lot of personality to it and a lot of energy. And actually, to be honest, that's a really intentional part of the brand, because as you and I know, we hate going to the doctors. Most people hate going to the doctors. They hate that clinical, sterile, cold feeling of being sick. And so if we can change how people think about healthcare, right? If it's something that people talk about on the train, or if they look at their buddy and say, hey, take a look at that ad, that's pretty funny. And it then starts a conversation about something related to their health, or maybe even encourages them to go seek treatment for their health. Well, in that situation, I think we've won as a country, where people are much more engaged in living better lives. And so, that irreverence, that spunk, that excitement that you mentioned is a big part of who we are. But, what we offer is, a huge swath of the things that people worry about every single day. So you can just come to Hims and Hers and check it out, and it covers most of those conditions.
And you talk about issues with the healthcare system, kind of the healthcare system being broken. How is the healthcare system broken? What's wrong with it? And how is what you all do at Hims and Hers fixing that or addressing that problem?
Yeah, the system is really, unfortunately, a system that was built 50 or 60 years ago. And it hasn't changed really in any material way. And you know that when you schedule an appointment and it takes 3 or 4 weeks, right, to get that first appointment. And then you drive, and then you wait in a line for a half an hour, and then you sit in the doctor's appointment, and the doctor looks at you for 3 or 4 minutes, writes notes, and then you're out. It's like all that just for those 4 or 5 minutes. It doesn't feel like it should, and it's because it's a system that is, frankly, really quite old, right? 50 or 60 years. It has none of the modern innovation and technology applied that pretty much every other industry in this country has. So with Hims or Hers, the things we prioritize are on-demand care. That means no matter where you are, where you live, and when you need care, you can click a button on your phone and get access to a doctor from the Hims or Hers website and immediately start connecting and discussing some condition you're worried about. We have on-demand everything, right? I can get Vietnamese food delivered in 10 minutes if I want, or my groceries from Whole Foods. Why can't I talk to a doctor on demand? We make affordability a key part of this. In this country, half of the families are not able to afford the deductibles on their insurance plans, which is a terrible stat. It means that half of this country can't even really afford to go to the doctor. And then another crazy stat, almost 80% of rural counties are considered primary care deserts. That means there's not even a doctor within a 2-hour drive. So access and affordability are really important when it comes to healthcare. So for us, we offer all these services for 20 bucks, 30 bucks, things that everybody can afford. And it's simple. It's cash pay. You don't have any complexity with insurance. Is it covered? Is it not covered? Right. So we just really simplify this thing down, make it affordable, make it accessible, let anybody pick up their phone and get access to it. And that's really what I think this next future generation of healthcare is about, is making it something everybody can access, no matter who they are and where they live.
Yeah, and that brings me into my next question, which is about your financials. Like I said, your market cap has just exploded near $4 billion, and a lot of that coming, you were valued at $1.6 billion, I think, when you went public through the SPAC. So obviously just taken off there. But for 2020, I'm reading here, the company is expecting to take a loss of $20 million on revenue of $138 million. You're planning to grow revenue by 30% next year. But I'm wondering about that loss. I mean, is that just from the overhead that you guys are having to pay to make up for some of these inefficiencies in the healthcare system? How is it that a platform that, is really just about connecting people still isn't able to be profitable?
It's really just a choice at this point, which is a great position to be in as a company. And I think that's really why there's been so much enthusiasm for the company, why the company's doubled in the market in just the last month or so, is that you have really robust revenue growth. I mean, you're talking about 100% historical year-over-year growth, which is rarely seen in the public markets. But then you also have an efficiency and a gross margin profile that is incredible, right? It's a 76% gross margin business last quarter. And if you look on a monthly basis, the company is really burning almost nothing, right? $1 million, $2 million, $3 million bucks a month. And while that might seem like a lot, this is a company that has hundreds of millions of cash on the balance sheet. So to be able to grow 80% plus year over year and only burn, a few million bucks a month or a quarter, this is a really unique opportunity. You think of most of the public markets, and these companies are lighting cash on fire to grow. And we're one of those unique beings where we're really not. We're getting more efficient year over year. We're continuing to grow really fast. And I think that combination of growth and efficiency is just something that is very rarely seen in the public markets, and a big part of why I think so many people are excited about it.
Yeah, I would agree with all that. But then how is it that you guys are still losing money as opposed to just generating massive profits?
Because it's always about the investing in growth and that knob, right? So if we wanted to be profitable tomorrow, we can do that, right? The ways you do it are you slow down on the growth, you stop investing in some of those new initiatives for 2 and 3 years out. But I think the reality is what we've seen from the market and what we believe in as a team is that this healthcare opportunity is so large that it warrants forward leaning. Right, it warrants investments in things that 1, 2, 3 years from now are going to be big opportunities, like new categories, for example, like diabetes or cholesterol or hypertension or weight loss.
So, what are the investments that you're making in those areas that are causing you to be revenue positive but profit negative?
You're essentially building new organizations every couple of quarters to build the experience that can help treat new conditions. And that's one of the beautiful things about our platform is it's a healthcare platform that can expand into a lot of different medical conditions, right? We've been around just 3 years and we're in dozens of conditions. Over the next 3 years, you'll see another dozen new conditions added as well, making it more accessible for people to get help across more issues. So the things you're doing is you're building out expertise with a physician group. You're building out product design experience so that it's seamless. Maybe you're building out things like at-home lab testing, right? So that a patient can prick their finger and check their cholesterol from home. You're doing all of those things to simplify healthcare. And again, when you're talking about this industry and the fact that it's really the first inning of maybe, a 15-inning overtime baseball game, right? You're the very earliest part. It really is important, and I believe this strongly, to invest in that future. I don't think there's any reason to be a profitable company today. And I'll say that really confidently because the opportunity to build something that is really transformational and that can be a 10, 20, 30, $40 billion company in the next 5 and 10 years is right there in front of us. And yeah, sometimes that requires a little bit more capital. But when you think about in earnest our overall cash deployment, burning 5, 10, 15, even 20 million bucks a year when you have hundreds of millions in the bank is, I think, a really fair trade-off for going after that big opportunity.
I think that is really a sign of the times, right? There's no reason to be a profitable company right now. I think certainly a sign of the times we're living in, and the fact that your company is rolling with that as opposed to trying to fight the wave. Don't fight the Fed, as they say.
And I think really, Dion, to be even more specific, when you operate in a market where there's true opportunity in front of you, a market that's in healthcare, it's a $4 trillion market, and it's about to get innovated in and completely disrupted in the next 5 and 10 years. When you have that type of opportunity with a team that it can execute, I really don't believe, there's a need to be profitable in that moment. Now, if you're in another market, right, where that opportunity does not exist and those growth opportunities are not there, well, maybe it's a different story, right, for those businesses. But I think we're really in a special situation.
Now, let me ask you a little bit about some of your competition, because there are other companies out there that do similar things to what you all do. There's also the Teledoc that's happening, One Medical, companies like that are also exploring this telehealth space. How are you guys able to build that moat and continue to, make yourselves a leader in the space that, is generating the most profit for shareholders?
The key to that question is the consumer orientation of everything we do. There are a couple of companies out in the public markets, like you said. Teledoc is an amazing company. It's almost a $40 billion company, so it's 10 times, right, our market cap. Now, when I think about Teledoc, I think about the fact that it took 13 years for that business to power 1 million medical visits, telemedicine visits on their platform since launch. For us, it took just 12 months, our first 12 months of operation, for us to do 1 million medical visits as well. And so we are operating at a speed that is an order of magnitude faster than most of these organizations in the public market. And the reason for that is because we are going direct to the customer, and we're saying, hey, it doesn't matter who you are, where you live, whether or not your company has insurance, whether or not you're covered with our service, whether or not you know a doctor, have a doctor, it's in network. Anybody can come to 4Hims, can come to 4Hers, and with one click get access to an expert. And then for $20, they can get the highest quality, best, safest, best clinical quality medication shipped and delivered to their door with ongoing maintenance from that expert. And so by going direct to the customer, by making it so consumer friendly, by making it so beautiful, so transparent in pricing, we have been able to unlock an amount of growth and an amount of brand loyalty that I think is really special and really unique. And I think in particular, we've been able to do that with the young demographic. You know, people in their 20s and in their 30s and their 40s that will make up the future of the healthcare system. And so as long as we continue to be focused on that customer, delivering amazing, beautiful experiences that they love and making it affordable and respecting them, I think we're going to continue to have what we've seen, which is really extraordinarily unprecedented growth in healthcare, and hopefully start to be able to compete with those big guys that you mentioned.
Okay. Last question I want to ask you is just, obviously a lot of this is predicated on inefficiencies and, you know, just the negative experience you talked about in the current healthcare system. We've got a new administration in place, the Biden administration, that has put a focus now on, you know, expanding Obamacare or the Affordable Care Act, potentially a public option, and then you've got the kind of progressive wing of the Democratic Party pushing for Medicare for all. How do you view some of these potential changes in healthcare as impacting what you all do in your company?
You know, it's a great question, and I am such a believer that there is so much to do in healthcare that all of it helps raise the tides for all boats. You know, you have situations where people can't afford medications because they are hundreds of dollars more than it actually even costs to manufacture. I mean, there's egregious dynamics in healthcare today. You have whole hospital institutions that make money in ways that in no way are dependent on the patient's health, right? If the patient gets sick or gets better, doesn't matter. They get paid either way, right?
You sound like former President Barack Obama right now when he was trying to sell Obamacare.
That's right. You know, so I think the more and more our government makes it easier for people to get access to care, the healthier the population will be, the more empowered they will be, and quite frankly, the more capable they will be to make great decisions about where they want to put their dollars in healthcare. And we will be an option for them. That's a beautiful brand. That's a consumer experience that's really catered for people, and that's really priced affordably. And hopefully we'll be a part of that. But ultimately, I think, you know, the more the government does here to help people, especially right now where you have, you know, tens of millions of people suffering every single day, the better. So I'm really excited about what's to come, and feel very empowered and hopefully energized to be a part of that solution.
Okay, I would have thought the government getting better at healthcare would be bad for business, but you think it'll be good for business? No,
you know, I think the healthier the population is, right, the better in this country. I really firmly believe that. You have a healthcare industry that is so fundamentally broken that hundreds of millions of people are not getting the most basic care. I mean, just basic, pick up the phone and talk to somebody when they have the flu, or they have an infection, right? Or they don't even know how to talk to their doctor. I mean, it is so broken. And so, you know, I think, you know, in the next 5 and 10 years, as more public options become available, it will lift up the part of the communities that are suffering most, and I think empower them to be more in control of their health care, and I think that really does help everybody.
And you think that'll help Hims and Hers?
I do. I think it's a tailwind across the board for more people to be energized and more people to be capable of taking ownership of their healthcare.
All right. Andrew Dudum, co-founder and CEO of Hims and Hers Health. Thanks so much for being with us on Voices of Wall Street.
Thank you, Dion, for having me.